All right, yeah, this is gonna be a long video because I'm already talking without turning on the mic. So, again, this is a script that I want to put together real quick tonight before I head it off. I need to do a little bit of reading, but I wanted to get this out of my head. So I figured I'd go ahead and take 10 to 15, 20 minutes to put this together before I went to sleep. Hopefully it doesn't take any longer than that, but if it does, then it might be short because I'm only going to give it that much time. So essentially what I'm looking at is this. I'm looking for a long bar like this to cross the 9-period moving average. Long bar like this to cross 9-period moving average. When it does, that'll turn one of the conditions on. From then, we're looking for a lower high. When we get a lower high, then we'll take the next high that breaks that high. And then as far as on the way down or exiting, we'll exit when we have a new lower low. So it would essentially be here. All right, same over here. It would this will be the entry bar, entry signal, and this will be the 5-minute time frame. This will be the entry signal, and then this will be the first pullback. So this will be your high one, and then you'll enter here, and then when you get the next lower low, which would happen here, you'll be exiting. So let's see what that looks like if we can get that on into a script and into a strategy. Okay. And this is part of what Al describes in his book, H1. So we're going to start like that. We're going to say that condition 1 is going to be to turn condition 1 on, we need to have a long bar. So we just use like the average true range. Just say that it needs to be greater than 1.5 times the average true range, something like that. So range is greater than I think I had one called range 7. Yeah, range 7, which is the average true range times 1.5. Verify that. Turn on show me. This is how so these fire. I wonder why this one doesn't. Okay, and then so the next one will be that it is a bull candle. Okay, and then the next one will be that it is that it has a small top wick. So top wick is less than 5% times the range. Okay, and then the next one will be that it crosses the 9-period moving average. All these do. So, we'll say that the close crosses SA9. Crosses over SA9. Uber. Alright, we should have got that one still because that close, but the close wasn't below it. We'll just say that the SA9, the 9-period moving average, is in between the low and the high. do between. It's one of the functions that I made. Between price, 69 between. I think the first one is the low side and then the high side. I've changed this a time or two, so yeah, low and then the high. The low number or low price and then the high price, which just happens to be the low and the high. Okay, so all those still fire up. Okay. Once they fire up, now I'm looking for the next. So once those are met, condition 1 through 4, then begin condition 1 through 4, then we're gonna begin. We're gonna say count valid plus equals 1. So we're going to count how many bars we have between when we have this entry bar and whatever happens next. Okay, so we probably want to take a pullback if it happens within so many bars. So we probably don't want to get 20 bars up and then take a pullback. Probably want to do it within so many bars. So that's why we're going to start the count valid. So this will be bar 1, bar 2, 3, 4. We actually get the pullback on 4. So let's see, we'll do count valid as long as it's less than maybe 5. All right, so we'll do it starts off as being false. The conditions start off as being false, and then you turn them true. Not true, then it's false. So all these things happen. Count valid is equal to plus equal to 1, and then we'll do end, and we'll say if count valid is less than or equal to 5 and the high is less than the high of a bar ago, then we've got a condition 5 that's equal to true. So condition 5 will equal to be equal to true here. gotta keep looking for lower lows and then find the next higher. Excuse me. Keep looking for lower highs and then enter on the high. Unless you get a lower low. Technically, we got it. Once we start getting lower highs, we cannot then get a lower low. Okay, so this is more complicated than I thought, which is good because I don't want it to be too easy. I really don't. All right, so count values less than or equal to 5, and high is less than need to. Okay, I know what I can say. All these are true if begin count valid. Okay, then we're going to say condition 5 equals true. Okay, and then if we want to keep condition 5 being true, all we have to do is say if condition 5 of a bar ago equals true, then condition 5 of this bar equals true. Okay, so now once we have condition 5's continuing to equal true, as long as we have if condition 5 equals true, okay, so now we need to look for the lower low. If condition 5 equals true and high is less than high of a bar ago, then condition 6, then begin. We'll go ahead and turn off condition 5 because it did what it needed to do. Then begin condition 5 equals false, and we'll say condition 6 equals true. Now condition 6 is going to be essentially the fallback. And okay, and if condition 6 equals true of a bar ago, then condition 6 of this bar equals true. Okay. If condition 6 equals true and high. Now this will be our entry criteria. So the first one was our signal bar, and this is our entry. So if condition 6 equals true and high is greater than high of a bar ago, then we gotta clear out condition 6, begin condition 6 equals false, and then also condition 7 equals true, and then end. Then we'll plot one low of condition 7. If condition 7 low let's see what we got. All right. Let's misspell a little something. Fingers not as fast as I wish they were, huh? If condition 6 of a bar ago, true. Okay. All right. So obviously it didn't reset the it didn't reset the conditions. Well, I guess I need to turn it off though. So we got condition 7 equaling true. So once condition 7 equals true, then we need to go ahead and turn condition 7 off on the next bar. So if condition 7 of a bar goes true, then this bar, condition 7, equals false. Spell it. Equals true. Okay, well, that should have been it. I told you. I mean, I think it's nice that this script is going to be a little bit harder to do. That will make it worth the while. So let's get rid of these because that's probably screwing with my me. Okay, perfect. Yeah, so this is the entry bar that we wanted. Now we shouldn't have two. You just have one for each of these. So this is what we were going for. So this was our entry signal, which was the long bar crossing over the 9-period moving average, and it has a very small wick, and it's a bullish candle. So it happened both here and here. And so then as you know, we get this high, now we get this first lower high, and then we get this next higher high. So this is our entry here. Our entry is that higher high there, and our exit would be the low right here. And so that's our stop loss down there, or we'll ride it all the way up until we get a new lower low, which would have happened right here. And same thing over here, we would have got in right here, this high, and then we would have rode it up until we got a new lower low, which would have been right here. This over here, I'd either code out this pre-market activity, or I'd figure out how to make the average true range a certain length, or just make the bar a certain length as opposed to doing the average true range, which again, when you get to these areas of much lower lower ranges, then anything is a long candle. So did it fire anything else on any other days? Surprised it didn't fire this one, but the only reason why I wouldn't have fired, well, a couple things going on here. One, this is a decent sized candle, but all of this is it's not quite barbed wire, but it's definitely a lot of overlap. So this isn't necessarily high probability anyway. This would have been better. This was a nice candle here, and it did cross over the 9-period moving average. However, you don't have any pullback. So from here to here to here to here to here, it's your first pullback. So technically you would have entered here, which this would have been your stop loss. So you would have got stopped out. And then this would have been your second potential entry here, getting in here. And then your exit would have been here, which obviously somebody trades that way because this wick here touched the bottom of it. You definitely want your stop loss to be a tick below it anyway. But yeah, so I can see that I need to modify this in order for it to work in more than one place, but it's got potential. It's got potential. But I saw it specifically on ES today, and obviously NQ did pretty much the same thing. So if we was put NQ on this, NQ, yeah, it pulled it here, and this long bullish candle didn't quite cross the S89, the 9-period moving average, so it didn't capture this this entry here. But again, what can you say? What can you say? All right, so let me see if I can. Again, I need. There's something here. Some reason why I've got two candles there. I should only have one. So let me look at this code real quick. And if condition 7, then plot low. If condition. Oh, we just need to put this here because we got condition 7 being equal to true on this bar, and then the next bar we got condition 7 equal to true again, and then we shut it down. So we just need to move this up above. All right, and then verify. That should be it. The high is greater than have a bar go. Again, condition 6 equals false, and condition 7 equals true, and condition 7, bar goes true, then condition 7 equals false. Fine. If condition 7 is true, then we'll apply level 1. Oh, it did do it. What? Am I tripping? Did you guys just see that? Well, I was sitting here studying this, and I didn't realize that this disappeared. You know, so obviously once I verified it, it took some time for it to calculate on the chart. So okay, good. So I only have the 1 now, so that's what I wanted. All right. So now the entry. But what's going to happen? So I'll go over to the strategy and I'll take a look at it, because what's going to happen is that we actually want to enter at this high. So this needs to be the signal bar. And we want to enter whenever the high is broken. So I'll have to modify that some. Yeah, it's going. How much time is rolling? 25 minutes already. All right. That one? Is that for this one? Oh yeah, that would have been a good one. That's right at the bottom too. It's right at the bottom. That one there is right at the bottom. That one's a good one too. That one, not so much. Why does that one look like that? Oh, because it started off down here, and then it came all the way up here before it had the pullback. Here, enter here, stop loss below here, or wherever below, but it should be a tick below that. It did move up, so if you have your stop loss right, depending on where you set your stop loss at, I mean, this would have been a good entry. All right, well, let me take a quick stab at it. Okay, so got to take all this. This is just extra data, not doing anything with swings, not doing anything with counts. Don't need to display. Not doing anything with that either. That, get rid of some of this stuff just to let the computer run a little bit faster. Now we're going to take all this, copy it. Oops. There we go. So let's copy it. does that when I hit the Control C for whatever reason. I think I have a hotkey set up. All right, so we're going to set up the strategy. It's going to be Al Brooks H1. All right, Al Brooks H1. Go back here. Put that in. Put it right here. Still have the counter A. I don't need this and that. Stop loss. I need a stop loss because I'll be using a prior bar. So again, here when I got to plotting the black, I plotted the black when I got to condition 7, but prior to that I had condition 6. So condition 6 needs to be where I'm starting at here. I don't need this. You don't need to plot anything anyway. So when condition 6 equals true, and you have a high greater than the high before it, condition 7 equals true, condition 6, the high is greater than the high before it, 7. The high is less than the one before it, then you want to begin condition 5 equaling false and condition 6 equaling true. So that's the pullback. So when condition 6 equals true, okay, so condition 6 of a bar go is true, then condition 6 equals true. That'll just keep trailing condition 6 equaling true until you get your high. Okay, so if condition 6 equals true, then you want to buy. You want to buy the high of. You want to buy the high. All right, so then buy last high. You want to buy the last high. Next bar at high. I think that's right. I think I can do that. It's entering in order for this bar is high. You're buying it on the next bar. So if you don't get to this bar is high, if you don't get to this bar is high on the next bar, then it doesn't matter. It won't be executed. And so condition 6 will just keep looking for that high until it finds it. And once it finds it, then we need to say that condition 6 equals false. So and we'll monitor that by average entry price. So if average entry price is greater than 0, then that means that we actually took a position. If average entry price is greater than 0, then we're going to turn off condition 6. Condition 6 equals false. And that way everything can start back over. Guess we're not even using counter A. Got a feeling I'm going to have to work through this logic again, but for the time being, I think I'm going to start with this. All right, and then set stop, share set stop. I don't even think we need this because let's do without this for the meantime. The stop will be if average entry price is greater than 0, then you want to sell trailing stop. This is essentially going to be a trailing stop. You want to sell the trailing stop. Oh, you do want to set it. You want to first set it below the low of the prior bar. Yeah, and then you want to move the trailing stop up. Okay, so hopefully it can work with all that at one time. Average entry price is greater than 0, then set, then sell. I'm going to do stop loss. Sell stop loss. Next bar at is the low of the bar before it. Low of the bar before it. So again, this is our signal bar. This is our entry bar, if you will, and then this is where we're actually entering at. So this bar here is where we are right now. Right now, we're at this bar here. So we want to sell the low of this bar. So the current bar. Okay, and then that trailing stop will be then sell. The average entry price is greater than 0, then sell trailing stop. Next bar at the current bar is low. Okay. I think all that's right. At least it's making sense as I'm telling the story in my head. So got some spellings right, got that at low, got all my semicolons. So let's see what it does. Okay. Stop limit contracts shares expected here. Expected wow. Stop limit contracts shares expected here. High stop. At high stop. Or stop high at stop. I think I do it stop high. Stop high. It's just saying that when it gets that, like, why are you selling at the high? Are you selling a limit at the high, like that price or better? Are you selling a stop at the high, that market price? So you need to qualify the price. And I think you put that before the price. Yeah, no, didn't like it. Likes it, but it doesn't like it. Let's see what I think it has. I'm pretty sure that's it. 75 stop. Okay, so we put the price first. We put the price first. Fair enough. Usually I don't write these out. Usually I just use a percentage. Go that way. All right, so 0 errors, very good. Let's see if it executes the way that we want it to. That's this one. And fingers crossed. Perfect. Damn. Okay. All right. Without running any optimization reports, this is how it looks. Ugh. Looks gruesome. Okay. All right, so these here are happening in after hours here. That move up look good though. These here, after hours, after hours, after hours, after hours. A lot of this funky business is happening in after hours. Let's take off the after hours. I mean, this right here, we really don't want that. So I'll tell you what, let's qualify the length of the candle. Let's say that the candle has to be 26 to 32. What's that? 6. Let's say that the candle has to be at least 6 points long instead of doing the average range and all that kind of stuff. All right, so range is greater than, let's just say 5, just for a little bit of wiggle room. Okay, boom. So we still have those. Now if we go back to the performance report, let's see. Okay, so looks better. We still have some stuff to clear up in here. And these are, nope, this is happening doing regular business hours here. The only thing about the way that I did this here with this specific type structure of trailing the stop and that kind of thing is that, well, I could modify I could do a strategy performance report, a strategy optimization report, which this hard stop right here, this hard stop, we had that at the low. I could make this a certain number of points or dollar amount because I can't do that for the trailing stop because that's based on that, on the structure, on the candle structure. So I can't alter that, but I can alter the hard stop. I think, yeah, so some of those hard stops got stopped out. Which this one here was not a great one. This was not a great one anyway. What are we doing here? All right, so I'm guessing this was the entry bar. This was the signal bar, the long blue candle crossing over the 9. And then we got a high, high, lower high. Should have wanted to take it right here. If it was going to take it, should have wanted to take it right here. Stop down here. And then it should have actually stopped us out down here. When we made a lower low. But why did it take this? That's not crossing the 9. This was a dip down. See how many other weird entries that we have. That one was good. This one crossed just below. And I think I said earlier that we need to set this for like a tick, so maybe just one tick below the low, because you can easily get stopped out by these little equal lows. Yeah, so this one is valid. So across here, we had a higher high, equal high, pull back, and that was a little bit higher. So that was valid. Entered there, and it got stopped out there. Because this, it wouldn't have got stopped out on this same candle. It would have got stopped out. Now we had a higher low, higher low. Now we had a lower low. When it crossed under that lower low, that's when it got stopped out. So I definitely see potential in this strategy. I just have to fine tune it a little bit. This would have been the buy, but I mean, this barely crossed the 9. I mean, it barely crossed the 9. So, well, we definitely shouldn't be taking these transactions. This one would have been okay around 10 o'clock or so. We definitely shouldn't be taking these transactions right here, 9:30, 9:39, 35. Shouldn't be taking them then. So that's a big no-no. Okay, so let's change some criteria here. Let's add one. We're already using 5, 6, 7. Let's go to 8 equals time is well, we'll leave pre-market in there for the time being. Time is less than 09:35, 09:20, and time is greater than 09:40, 45. And we'll just sneak that in here. Okay. What did I do? Time is less than 9:20. And this has gotten me before. Time can't be both less than 9:20 and also greater than 9:45 at the same time. Time is less than 9:20 or time is greater than 9:45. There we go. All right, so curve still looks ugly, but it looks better, but it still looks ugly. All right. What did I say? I said about the stop. About that stop. Stop here. Instead of it being a hard stop at the low, we can make it a number of points. So we can say then well, let's do this. Then low minus 3, 1. We'll make this an input. We'll call it stop margin. Low minus stop margin. And because we put that as an input up here, now we can use that as part of our strategy optimization. You can't do that unless you have it as an input. So you see here's the input. Hit optimize, and we can go from -1. Why would you do that? Let's just go from 0 to 5. Increments of 0.5, something like that. Okay. Optimize. So looking at profit of 225. Not there yet. Not there yet. Okay, that actually didn't change this chart very much. None of these change either. You tried it at 5, 4.5, 4.0, 3.5. You tried all these different iterations of changing that margin, and it really didn't change the winnings. I think that's a good thing. I think that's because the stop isn't really being hit that much. It's the trailing stop that's being hit, which means that we are getting into it at the right spot. But we gotta hit it at least a couple times because we're having some losses. So 2-1. Okay, both those worked. And these are the ones that I was actually looking at for today. So this is what I created this strategy around, this here. And it worked perfectly. So whatever else didn't work is because I didn't create the strategy for that. However, this worked here. By last high. Oh, so even with the trailing stop, just because of the way the trailing stop is set up, it can still trigger it and be a losing trade. So trailing stop up, that's trailing stop down. Let's make this script for 1 tick above, or maybe 2 ticks. Do a 0.92, half a point above the last high, because that just wicked us in at that one kind of equal high. That 1 point above it wicked us in and just took off with our money. So if we put our entry at like 2 ticks above the high, then we should be able to avoid getting suckered into a move like that. All right, so we want to buy where next bar high stop. No, not just the high stop, but high plus 0.5. 0.5 should be 2 ticks. Is that going to do it? Yeah. But this is what's happening. Okay. All right, I got you. Because we didn't get in right here. It just went down and it found the next potential entry. But now at this point, now that you're going down here, it's looking more like shorting, a sell-off as opposed to another buying opportunity. But it worked the way we wanted it to. But I think we should say that if a bearish candle closes below the 9, then it invalidates this script. So whereas we're looking for condition 6 to be true, we'll say we can actually say this up here anywhere. If bear and between what? SA9, the low and the high. So if the 9 is between the low and the high, it's a bearish candle. So in other words, it's going down. Then condition 6 equals false. Bear and between SA9 and condition 6. False. But because we have this here, it's turning it back on. So we need to put that right there. Order of operations is everything. Order of operations is everything. Bingo. Okay. All right, so curve is... I don't know, man. I don't know. I think it's looking worse. I don't know. We're still working on it. So, all right. So that one worked out. That one, not for a lot of profit, but then I'm gonna re-optimize this. I see that got us for that tick below again. Margin. Did put that as minus. Minus the stop margin. Yeah, that's not really helpful. All right, so we've got 1, 2 that worked in our favor. There's another couple that worked out as well. I don't know why this looks like that bought multiple times. Bought and sold. I think this is the same thing where it crossed over the 9, made a higher high, maybe an equal high, higher high. We got the lower high, equal high, lower or equal, and then the higher high. So we're looking to enter here, but by this point, since this red candle crossed through the SA9, through the 9-period moving average, this should have turned this off. And it's now waiting for a new setup. I feel like that should have been it. Because I think it's holding condition 5. Yeah. I think when we did this, when we did this, we need to also not just condition 6 being false, but we need to shut everything down. We need it because this is just a cog in the wheel. But the other cog is condition 5, and condition 5 being true says, hey, well, condition 5 was true, so let's keep the ball rolling. We just shut down condition 6. We need to shut them both down. So in order to get 2 criteria in there, we need to do that. Wrong line. Getting a little overzealous there, Eric. Getting a little overzealous. And need to put an end. Boom. All right. Fortunately, I'm gonna have to come back and look at this script later. All right, there's one, there's two. That's looking good. We got rid of that nonsense in there. There's another one that looked good. It stopped us out too quick though. So again, I think the optimization should help for that, but let's try it here in a second. Just scrolling on back. That one looked like I took a L on that one. That one looks like that was a winner. That was a winner. That one was a loser. That's a lot of mess in there, but it's like there was a loser and a winner. So try one more time for optimizing this. Well, that is better. 487 is better than we were at 212. So let's see what the curve looks like. Curve looks better. It looks better. Don't like how steep these are though. I mean, one of them I'd be okay with, but not two of them. And I think those were the two that we just saw. Two that were in that congested area. But again, I don't think the optimization is really doing anything. The margin. Okay. Maybe it did. Okay, it adjusted it to 5. Okay, so, well, then if it adjusted it to 5, and that was the higher end of our optimization, that usually tells you that you need to give more room in your optimization, that it's not high enough. So we'll go to 30. I don't know. That's usually what that tells you, because you should fall somewhere in the middle, something like that. All right, yeah. So we have a lot more tests that were done, but the result was still the same, 487 total. Okay, so didn't really help out a lot, and the setting that was applied, it made it to 30. So again, 30 is not high enough. And just because I don't like messing around a lot, I'm just gonna make it 150. I don't like doing and doing and doing. I'd rather get it done. So might take a little while. That was pretty quick. All right, so the profit is still the same. Stop margin is 150. But now it's not starting to make, it's starting to not make sense now, because it's not changing the graph, but yet it's optimizing at 150. Technically, this one here, this is one of our losses. This here is happening at we're getting stopped out by our trailing stop, not by the stop loss. So where was our entry bar? Because this SA9 is here. This nine period moving average is here. We didn't cross it here. It says it'll be bought here, so that would mean that this is part of the pullback, which would mean that the crossing would be from here. It's way too far. It's way too far. That's way too far. Now, when I started this script, I said I was going to make it like it had to. We had to have that pullback within 5 bars or so. And that's why I started a count. I was going to do a count. Let's see. If all these are true, then condition 5 equals true. Else condition 5 is false. Condition 5 equals true, then condition 5 of 1 ago is equal to true, then condition 5 is true. So I'm going to add a count in here. So we can keep doing the condition 5s. That's fine. That's fine. But we'll say we use a counter. Just use the counter since we're not using it anywhere else. We'll say that if the condition 5 is equal to true, then condition 5 equals true. If condition 5 equals true, and just gonna put one more line in. So if condition 5 equals true, then counter plus equals 1. So we're going to start that counter off. And so we just want to make sure that when we buy this thing that the counter is less than or equal to like 5. We don't want to let it go so far extended before we take a pullback. I mean, because that's, you know, kind of counterintuitive. You're already getting into the supply zone by that point. You're getting overpriced. All right, so we're going to say when are we taking a buy? If condition 6 is equal to true, then buy. Condition 6 is equal to true, and counter is less than, we'll say, let's start with 6, then buy. Okay, and now if I'm thinking about, I need to figure out where I need to reset the counter at. If there's nothing in the, well, when it gets to 6, if counter equals, we'll say 7, then counter equals 0. So we reset the counter. Counter, if condition 5 is equal to true, that condition 5 that should work. Period moving average is 94.75, and the high is 94.75. Got a sneaky suspicion that even though that this high touched this 9-period moving average, that I didn't say that it's got to be equal to or less than. I said it's got to be between. Between means, well, to me, between means between. It doesn't mean equal to or less than or greater than or greater than or equal to or less than or equal to. But I'm thinking it was taking this as being the initial candle. So I made this equal to the close, which is this grade here instead of the high. So it did take it away, but yeah. All right. See what the performance chart looks like now. Lost a couple. Okay. Better yet, still, I don't know. Now we only have 5 trades, which, you know, I have the other script set up to do the multiple trades on the 5-second time frame. Where is it? The algo chart. Yeah. So I've got these set up on the 15-second time frame and the 5-second time frame, and this script here for the 1-minute time frame, you know, it would have made what, like $26,000 over 3 months, buying 5 contracts at a pop. On 15-second time frame, same thing, 5 contracts could make $130,000 over last month. 5 contracts. So again, that's got to be tested more in real time and that kind of thing. But so I'm trying to find something for, like I said, the 5-minute time frame, right? So the 5-minute time frame, I wouldn't expect to have as many entries. The 1 minute and the 15-second time frame, a lot of entries. 5-minute time frame, obviously, not as many entries. So 5 entries over 2.5 weeks. Okay, but I could probably come up with another script to complement this. But 5 entries is not a lot. And boom, this first entry. I don't love this first entry because it's not adding to our portfolio here. So what is the first entry? What is the first trade? Or I guess this is the second trade. 122 1105. Let's see what's wrong with that. That was a win though, so this must be the loss. All right. Why doesn't this make sense? Okay. Well, I'll tell you, the first thing I'm looking for is, I'm looking for this. This should be, again, the entry signal. And I'm hoping that it's not taking this guy. So I know an easy way that I can address that is, instead of having the low, we did the close here. Instead of doing the low, we should really be doing what? The open. So we'll start there. And I did get rid of it. And that made our curve beautiful. All right. So I think that's pretty much it. I will go back over it tomorrow to make sure that the logic and the syntax makes sense, because I did one thing that I'm not so sure about, which is this where I added the counter, because when I added, I don't think that it actually changed the script. Well, but if I take that out, then I need to take out counter here, counter less than 6. All right, see, I took that out. Well, it did affect it, didn't it? So I had another trade in here that started me off 150 in the hole, because that piece of logic actually was helpful. Okay. All right, let me go ahead. I'm gonna add it back. Then I'm gonna add it back, and then I'm gonna get out of here. Average entry price greater than 0. Condition 6. Ah, shucks, I don't even know where I had it at. There. That. Okay. Bingo, bango. Right, so we had 5 trades before. We kicked that first trade off, and then we got that. So let's just do a strategy performance or optimization report. See if we have anything any different. Still not sure why this number just like goes on forever, and it's not seeming to affect anything one way or another. So we'll set it at 500. Again, it didn't change anything. All right, so this script with 5 contracts at a time. Oh, I have this one set as 1. How come I have the other one set as 5 contracts? And I plan on using these contracts, especially the 5-minute time frame. I plan on using this like with the combine, some of these prop firms, and I'll just kind of have these things going in the background, and then I'll just, when I get these signals to enter, I'll just enter, and so I can do the 5 contracts there. Whereas opposed to, I can't really do the 5 contracts on my own because I don't have that much money in my account to do that yet. But these scripts will help me for sure. All right, so like I said, I'm doing everything on the 5 contracts. So just to keep it consistent. Properties for all. I've been putting this at 200 bars though, so that might knock a trade off. So I just have to expand my my interval for my charts, but 5 contracts. Okay. So just apples for apples. Yeah. So would have made about $4,500 in the course of about 2 weeks. $4,500 in 2 weeks. That's good math. And all of them were winners too. All of them were winners. They weren't winners because they were they weren't winners because I didn't have a stop loss. And like I played with different scripts and that kind of thing. And if you don't put a stop loss, then the price can come back in your favor. And if you have a wide risk to reward ratio, it can always kind of come back in your favor. But no, I've got a nice stop loss. I've got a nice stop, and this I think this is just a good script. So for the 5-minute time frame, yes, $4,600, 100% profitable. Only took 4 trades over like 5 weeks. This is good stuff. Okay, so this is one I gotta keep. I hope you took notes for yourself. I'd be silly to run it back for you again, because I'm already doing so much for you guys. But yeah, I mean, I just sat here and did the whole thing, and I went through the logic and everything. So, and I mean, you saw what the logic was. I mean, it's the same thing. And I gotta go ahead and get to reading. I'm supposed to be asleep by now. It's 10 till 12, but it's in the book. It's in the book. So, I just added another piece of logic or two to it, and then I scripted it. So, I'm curious what it looks like on NQ. They don't all work the same, so I'll have to go back and modify it for NQ, I'm sure. It works for NQ as well. See what the performance graph looks like. It's not as pretty, but NQ is a volatile being. NQ is a volatile, disruptive creature. About $8,500 or $9,000 on NQ over the same period of time. All right, so I don't really have to touch this. This is the 5-minute time frame, though. I do know for a fact also that different time frames different strategies work for different time frames. It's just the way it is. One strategy ain't gonna work for every time frame. So let's see what it looks like on the 1 minute time frame for ES. And it's not even finding anything for the 1 minute time frame. And we go back to the 5 minute time frame. Oh. Back to the 5 minute time frame. We got our trades. Okay. All right. So that's pretty much it. I need to save this. ES 5 minute. And if I could make an extra $9,000 in my sleep a month, over $100,000 a year, just letting my computer run and do its thing, even if there was drawdown and it was only 50,000, you understand? That's good stuff. That's good stuff. All right. And if you don't think it's good stuff, then I pity the fool. You know what I'm saying? So anyway, there's your beans and dessert and all that good stuff. And again, my mind is shot right now. I'm supposed to be reading, and I am going to skim tonight, and I will read tomorrow. So I hope somebody got something out of this video. I appreciate folks for tuning in. I know it's going to help somebody because the time and effort that I go through, it's not for nothing. And it makes me stronger and better each time. So hopefully somebody can pick up something that I'm doing, and it can take some of the extra time that it takes them to matriculate through coding and programming and the logic of the markets. It'll make it a little bit easier. I've got a lot of hours on YouTube, so something will help. I'm sure of it. I'm sure something will help. So, guys, as always, happy coding, happy trading, stay green. I'm Eric. I'm out. Peace.